Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex. I'll start with Chicago soybeans themselves. Beans in the teens, but only just, really, only just. Now, I said here 4 weeks ago how I'd noticed two new possible patterns, initially not necessarily complementary. The first pattern is one I will concentrate upon, and is the mid-June to date ascending triangle. Okay, strictly speaking, the flat top side trend line is capped by the resistance at 1459, whilst the rising mid-June to date uptrend, currently 1363, is the lower rising trend line. That is strictly speaking. However, I will also look closely at the rising long moving average, currently at 1371, as a possible dynamic contender for the rising uptrend, or at least an influence. Likewise, the flatlining more or less medium moving average, currently 1441, could be seen as a dynamic contender for the flat top side trend line. Well, more likely an influencer actually. Well, 2 weeks ago, prices punched down through both the long moving average and the uptrend, but then did nothing. The market slid along under both of them, which wasn't very satisfying at all. Now, before I go further, a few words on ascending triangles. They can break either way. However, they tend to break upwards something like 6 to 7 times out of 10. I just want you to know that because over the course of this week, we've seen another new pattern emerging. That will no doubt have a major influence. You see, we are set to have a possible weekly reversal this week. If we close on Friday night, either over, that's tomorrow night, over 1373 or under 1344, then we'd be on. Right now, we're looking at a possible weekly key reversal down. Now, I can think of many lesser features and actions that might trigger a possible move from an ascending triangle. So it looks very much as if a trigger here may be about to happen. Hence, I've labeled initial target X in the 1290 area as a potential target for such a pattern. Now, there isn't that much of a move in relative terms, but I suspect there's a whole lot more in the psychology of being, well, what being below 13 cents a bushel really means. Chicago soybean, Neil. I spoke some 8 weeks ago how, and I quote, the month of May was a monthly reversal down. It's important to remember that, end of quote. And during June, the market broke down through the long moving average. That's currently at 399.40 and dropped down to the lower time, currently 313.80, with a bearish 2021 Andrews pitchfork. Then there's target X below in the 337.30 area. I think I better reprise my commentary from about 9 weeks ago to better explain why there's a target X down here. I quote, the next is a little bit unsure and a little bit out there, but I'd rather say and look a fool now than a bigger fool later, should it happen. Disregard the whole action from the high in May to date as a possible bear flag, come bearish halfway hesitation type action. I'm the first to admit it is far from perfect. But if we look at it, we do have a possible pattern there, and with a possible target X on the downside of 337.30. Like I said, I'd rather look foolish now than later, and that's the end of the quote. That was then, and this is now. Prices came close to target X at the end of June, but were stalled and diverted back up by the declining lower time. However, I'll keep target X on there for a bit longer. I just think it may still have a relevance. Since that drop, prices have pinballed even, in between the lower time and the middle time, currently 360.20, with the 50% Fibonacci of the August 2020 to January 2021 move at 376.70 and the lesser Fibonacci level at 354.30 also having varying amounts of influence. It is at this time that I wish to recognize the wonderful job the bearish Andrews pitchfork has done in channeling the market lower. It was drawn in May and has been useful and valid up until this very day and perhaps for some time forward. That is the key to the market here, the bearish Andrews pitchfork. When it gets busted or adjusted to a bearish shift pitchfork or some other pattern, then we can look at it for new ideas. But until then, what rules the incentive in this market since last time has been this somewhat half-hearted move, but the pressure from the declining middle time of that bearish Andrews pitchfork and its recent partner, the declining short-medium moving average, currently 360, 340, are pressing heavily upon this market. And they come to an actual apex with the lesser Fibonacci level at 354.30 at the end of next week. So it would not be unreasonable to look for some sort of move. Then there's what's happened today. Today we have what looks like a bearish open, well, let's say a bearish opening long black Mariposa in the offing. Perhaps this is part of the trigger mechanism, in which case I'd suggest keeping a long, close, hard look at what may happen, and also on the target X. Just remember to keep looking at the times. They'll work until they can no longer work. Chicago soybean oil. Once again, I repeat, the pattern that became obvious here over May to July, bar the horn top in June, is a rather lopsided diamond pattern. I'm the first to confess that it's not a pretty one, more functional than aesthetic, but it is also still there. Now, a few words on this pattern. Diamond patterns can be tops, bottoms, or continuations. In this particular case, it would be either a top or a continuation. Now, 4 weeks ago, prices broke down through the lower uptrend of the diamond, but that wasn't enough. Admittedly, we had a combined key reversal down and bearish engulfing pattern to start off with, but we also had 2 days of countering indecisive action, and so I viewed it as a potential false break lower. Not so now. You see, prices this week have broken down through last week's low today, as well as the rising medium moving average, which looks like a bearish open and close long black Mariposa as well. On top of that, and very, very, very significantly, we are set for a possible weekly key reversal down this week. If we close tomorrow night, that's Friday night, either over 63.75 or under 61.80, then we're beyond. Right now, we're looking like a weekly key reversal down. Now, I know there is congestion below between 57.64 and 59.44, but I also know that we are also within a descending wedge come bear channel, currently between 58.89 and 63.63, and that's dating from mid-July, and just started before the market exited the diamond pattern. All this indicates to me that a move down to the area of an initial target X in the 55.80 area and a secondary target X1 in the 53.80 area would be possible with the current diamond top. Please just remember one thing. I've repeated it before. We did have a monthly key reversal down in June. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.